The biggest mistake that people make with housing is renting. For anybody who is renting, it's quietly costing you thousands of dollars every single year, and you probably don't even realize it. This isn't to say anything negative about people that are renting, of course, but it is to help educate you and empower you to help you know your options. In this video, I'm going to be breaking down why renting is a mistake, what it's costing you to rent with real actual numbers, how to get out of renting and get into a home that you own even if you don't think you have enough money for a down payment, when it makes sense to actually rent, and how we here at Stratton Group give you up to $5,000 to help you get out of a lease and into a brand new home. So first, let's talk about why renting is a mistake. A lot of people think that it might be cheaper to rent, but in reality, it's often not. A lot of people decide to rent because they think it's easy, it's flexible, and it's a safe choice, but a safe choice doesn't always mean a smart choice. Rent is constantly increasing, usually every year, and a mortgage payment typically doesn't. With renting, you build zero equity. So at the end of the year, you have nothing to show for it. The money that you've paid to your landlord is just gone. A house is actually going to build equity. So on average, the value of a home typically appreciates approximately 4% every single year. So you're gaining equity if you own a home versus just throwing money away to a landlord if you're paying rent. When you own a home, the money that you're putting into the home and gaining equity, it's kind of like putting it into a piggy bank, a savings account that you can actually draw from later. So with renting, you don't get any tax advantages, where if you're owning a home, you get to write off things like all the interest that you pay all throughout the year. You get to write that off, which means that you pay less money in taxes. Let's talk about inflation for a minute. When inflation goes up, then the landlord typically increases the amount of rent, so you don't have any control over that. So often every year for multiple years, you'll see your payment increase every single year, and that doesn't happen with your mortgage. When you have a mortgage payment, the amount of money that you pay every month towards your mortgage stays the same for the life of the loan. Typical loan lasts for 30 years, so it's pretty cool if you can keep the same payment every single year for a whole 30 years. Let's break down the real cost of renting with actual numbers. So right now, kind of a typical rent for maybe a 3-bedroom, 2-bath house is about $2,000 a month. So when somebody goes to move into a rental property, they're going to have a deposit. So usually the deposit is the same amount as the rent. So you would have $2,000 out of pocket at the beginning. Then you would also have any expenses for a pet, another pet deposit. And then you would have your first month's rent. So typically to get into a home, you're looking at least $4,500, sometimes even more. So that's just to get into a rental property. So then if you're paying $2,000 a month, at the end of the year, you've paid an additional $24,000 that you see no return in. Over a 5-year period, if you add that up, that's about $120,000 that you have paid to a landlord, and that's if the rent amount doesn't even increase. So in reality, you're probably going to be up closer to about $150,000 that you've given somebody else, and you have nothing to show for it. Rent is basically 100% interest because you're paying it every single month and you get nothing in return. You're not paying down the amount of money that the property is worth, you're just giving it to the landlord. On the contrary, buying a home works very differently and there's a lot of benefits to it. Mortgage payments are much more stable than rent. So the amount of money that you pay for your mortgage payment will stay the same from year 1 all the way through year 30. The only thing that could change a little bit is the amount of money that you pay for taxes and for insurance that's lumped into that monthly payment. So every couple years, sometimes people will see that change a little bit, but the amount of money that you're paying for the loan will always stay the same. Let's break down what's included in the monthly payment when you own your home. So a portion of the payment is going to interest. So that's just going to the bank to give them money to basically say, thank you for letting me borrow this. Another portion is going to pay taxes. Another portion is going to pay the insurance. And the last part is the equity, which is the amount of the home that you actually own. There's a saying that says that owning a home is the #1 sign of wealth, because real estate is a great way to build your net worth. So every month as you make the mortgage payment, you're owning a little bit more of your home each month, and the real estate market on average increases approximately 4% a year. That means the value of your home is appreciating every single year. Let's go back to our example after 12 months. So after 12 months of renting, you paid over $24,000 to rent a home, versus if you own the home over those 12 months, you've probably still paid about $24,000, but now you have equity in that home that you could pull out at a later time, and your house is most likely worth approximately 4% more than it was at the beginning of the year when you bought it. So you've grown equity and you've grown your net worth, and your house is worth more, so it's appreciated. Rent goes up forever and a mortgage eventually goes away. To break it down into numbers, if you're purchasing a home, you could buy a house for about $325,000. You could get an FHA loan, which would be a minimum of 3.5% down. That means out of pocket, your down payment on a new home would be approximately $11,375. So it's about twice as much as it would cost out of pocket to rent a home. But again, you're getting all those values every single month. And over the course of a few years, it makes a big difference for you. If you heard that and think, oh my gosh, I don't have $11,000, there are some very creative ways that we can help you figure that out. I would love to meet with you, get you in touch with our lender, and then between the three of us, we can help find ways to make that work for you. A sneak peek into a couple of those options would be getting into a first-time buyer program. We could do a gift from a family member. There's also ways to pull it out of an investment account, 401k, Roth IRA. There's a lot of different options that we can help you learn about. There's a lot of different options that make it a lot easier than people think without breaking the bank. Another objection that we get often is, okay, I would love to buy a home, but I'm stuck in a lease. That used to be a really big problem, but not anymore. We have a solution for that. We love helping buyers get into homes. So we created a program called the Stratton Stepout Program. And with that program, we give up to $5,000 for somebody who is in a lease and they need to get out of the lease and into a new home. So if you're thinking about this would be a great option. We'd love to meet with you and see if we could make it work. This would be getting you out of your lease and getting you into a brand new construction home without you having to pay out of pocket to break your lease. We specifically do this program with new construction homes because there's a lot of extra benefits that make it easier for people to buy new construction than it is over resale also. New construction builders offer things like discounted interest rates, paying buyers closing costs, and all of those things help you so that you can get into the house with less money out of pocket and the lowest monthly payment possible. So we package this program all together. We give you the money to help you get out of your lease. The new construction builder gives you a better interest rate to keep your monthly payment down, and we can get your closing costs paid by the builder as well. For a lot of people, this helps renters eliminate the biggest barriers that keep them from buying a home. We've been talking a lot about why buying a house makes sense, but there are a couple of scenarios when renting is still the best option for some people. If you're planning to maybe relocate very soon, or you don't have stable income, or sometimes just flexibility matters more than growing wealth for some people, then it might be a good option to just continue renting until your circumstances change. If none of these scenarios apply to you, then talk with me, talk with my lender, and let us see if we can get you on the right path to buying a home. It costs nothing to meet with a lender, just see where you're at. It takes about 30 minutes, super simple, and we can decide if it's the right choice for you. You're not tied into anything, no commitment. There's actually some emotional costs that come along with renting as well. So stability is really hard. A lot of people who are renting end up moving every year to 2 years. So for example, I had a friend of mine that moved every year, 3 years in a row with her and her whole family because the rent kept going up so much each year. So she had to keep moving, finding something that was more affordable. There wasn't a lot of stability for her. There wasn't a lot of stability for her kids. Another emotional cost, if you've ever rented in an apartment, you're gonna have maybe the noisy neighbors upstairs. No matter how clean your house is, you're gonna get the cockroaches from the gross people next door. Take a toll, it takes a toll on your body. Come to me, buy a house, get you some privacy, keep your house clean, get rid of the cockroaches, you're good to go. If you're renting and wondering whether staying put or stepping out makes more sense, we'll run the numbers with you, rent versus buy, lease cost, and whether our step out program applies to you. No pressure, just clarity. We're super passionate about helping people buy homes that didn't think that they really could. So give us a call, send us an email. All of our contact information is in the description below. We'd love to help you out. And of course, make sure to like and subscribe to our channel so you don't miss out on any future tips. See you on the next video.